Thank you, Francis, and thank you to Kensington for the opportunity to speak to you this morning. I'm Robert Sinclair, the Chief Executive of the Association of Mortgage Intermediaries. I'm going to talk to you today a little bit about the regulatory landscape and my views of the new build market for the rest of 2020 and into 2021. Let me share my screen with you so that you can see the presentation that we put together for you. Always tricky getting all of the technology to pull together, but we'll do our best. So as I said, I'm going to talk to you a little bit about the new normal of where we are and the impact of that new normal on the new build market. I think where we are at present in terms of the landscape that we live in today is a very different one from the one we would have expected at the start of the year. What was interesting though was that having gone into lockdown in March, the market in its broader sense came together in April and May, where lenders, brokers, conveyancers, surveyors, and the removal industry came together to try to work out how we could safely reopen the market. And those teams pulled together to present to MHCLG and to Treasury, which meant that when lockdown was lifted in June, we had a series of operating procedures all agreed and signed off that meant that the number 10 were happy to reopen the housing market very quickly as one of the leading areas in order to get Britain moving again. And I pay credit to all of those who were involved in that discussion and debate. What we have seen, however, over that similar period is that lenders have been very much stuck from an administrative perspective, dealing with the people who've taken payment deferment, whether for a 3-month or a 6-month period. And that has really sucked up a lot of their administrative capacity as they've also had to migrate to home working. And indeed, lenders are probably still only working at 70 to 80% of capacity, given they've got so many of their staff working from home rather than in the office. And that gives them significant issues from a processing and capacity perspective. What we also have, of course, is furlough now beginning to end and having to think about the impact of that. And there are those who are going to unfortunately lose their jobs as part of that process, and we've got to think very carefully about how we deal with all of that. And indeed, the FCA is now introducing new practices for those who might be facing into mortgage arrears and asking lenders to take a much broader view in terms of how they might deal with that, either by extending forbearance for longer than the existing payment holidays for some, or perhaps avoiding possession even where those are in arrears in order to give people time, if it looks realistic, they could find another job within a reasonable period. So this landscape is continuing to evolve and change as we go through the rest of this year. And what the FCA has been really focused on, however, has been the consumer. And indeed, from a consumer perspective, I think the FCA has had a stunning crisis. I'm not so sure they've managed the element with regard to how firms are coping as well, but from a consumer perspective, I think they've been really, really positive and helpful in that regard. And what we have seen is the, excuse me, the implementation of something from the competition review that was done in 2018-19. By the implementation at the end of July this year of what they call the cheapest rule. That's a rule that says that if you're not representing or recommending the cheapest mortgage to the customer from those for which they're eligible, then you have to explain that to the customer and document why on file. And that cheapest rule is set down in MCOB rules, but of course it is the last of a series of suitability rules, and actually you should be able to, by using all sorts of other elements, and be able to justify why you might not if you actually believe that that cheapest product is not the most suitable, whether that's because of service standards or other parts of the product set that may differentiate it from other products in the marketplace. What we have seen also is the FCA defer 2 major consultations, one on operational resilience and one on open finance. They deferred those in April, and they are now not looking for responses from those until October, which means that any changes that will happen in that marketplace will not come until 2021. They have been surveying firms on firms' financial resilience, and most directly authorised firms and networks have had to respond to the FCA over the last few months to set out their profitability and cash flow and issues that they may see coming over the hill with regard to their financial position. And the expectation from the FCA is that firms who are facing into difficulties should make proactive contact with the regulator in order to make that clear and allow discussion as to how they may want to resolve that matter or exit the market if that's what's required. There's also a new consultation out on vulnerability, which is exceptionally important in that a number of consumers, because of illness, job loss, or other factors might be deemed to be vulnerable at this point. And this consultation, which is now out for review and response by the end of September, sets out much more about a spectrum of vulnerability and asks firms to consider that. And I think the mortgage sector is actually quite well placed in order to deal with that, in my view, in that the way we fact find on mortgages and on protection means that there's less for us to do than perhaps other areas of consumer credit and claims management or debt management, because I think they've got much further to go in terms of assessing vulnerability and dealing with it empathetically. What we also have, of course, is issues now around conduct risk, which are escalating given where we are in the regulatory cycle and the economic cycle. I think it's essentially critical that you talk to all of your existing customers on a regular basis. Don't see this as a nice to do, but in fact a need to do in order to demonstrate that you're close and adding value continually. As we're very busy in the purchase market at the moment, as we've seen everything return and consumers become very excited and a lot of pent-up demand released as we've come out of lockdown, I would encourage all firms not to ignore their existing customers in terms of remortgage and product transfer, as they are existing customers are the people that will keep firms afloat for many years to come. And whilst new business is always important in terms of the purchase market, looking after your existing customers is critical for any firm. One of the other conduct risk areas that the regulator is becoming increasingly concerned about is the overall indebtedness of consumers. And they're particularly looking at all people involved in discussing with customers, not just to understand where they might be in their unsecured or credit card debt, but also where they may have been borrowing from families or lending to other parts of their extended family, and therefore understanding exactly where their financial position is as they're going through this crisis. What I also say is that from a conduct risk perspective, never has this crisis demonstrated more the importance of protection. And consumers are probably much more open to having that discussion now, and therefore any review that you have, protection I think has to be a discussion in order to make sure that we've dealt appropriately to make sure we have a fully protected mortgage and a fully protected customer. The last part of this from a conduct risk perspective is that we make sure that the firms, your firms, are around next year and the year after. And therefore I think we're going to have quite a good cash flow period against all expectations in Q4 of this year and Q1 next year. And I would recommend that all firms try to put some money away for what I do see as being a much tougher period in the second half of 2021 for various reasons which I'll come to. I think part of that is around this whole new build arena. And one of the things that I think everybody needs to understand is that as far as Help to Buy is concerned, Homes England do think that is the advisor responsibility for that recommendation that the customer takes Help to Buy. It doesn't sit with the builder, it doesn't sit with the lender. They view that choice of Help to Buy as being very much part of the discussion that should go on with the broker. So the broker talks to the customer about whether they should be buying that 4-bedroom house with Help to Buy, or whether that 3-bedroom semi might actually be a better option for them without Help to Buy. And that should be an active discussion that should go on with the customer and the advisor. Of course, we are going to see significant changes to the Help to Buy scheme as we transition through the next few weeks and months. The existing scheme is effectively coming to a close now, with no new applications being accepted, because the dates now for completion of effectively exchange by the end of February and legal completion by the end of March 2021 means that any offers being made on existing builds are unlikely to complete before those dates, given the elongated build periods that we now have, as builders have to keep social distancing on site. So there has to be realistic discussions about completion dates with consumers and builders, and the broker is a core part of trying to make sure that all parties can stick to the contracts that they make there. Otherwise, of course, we'll have issues with people sanctioned under the old scheme who may not be able to complete it under that scheme, and therefore are not eligible in the same way under the new scheme. One of the things that's causing a blockage in this system is the fact that the existing scheme is very much paper-based, and Homes England are introducing a new computer system in order to deal with the new regional scheme, which has got significant value variations around the country. And that new IT system will not come on stream until October, and therefore, although paperwork is now out with builders in order to get them ready for the new scheme, Homes England I don't think will be in a position to accept applications and give approvals until the end of October, and therefore we have a bit of a hiatus between the two Help to Buy schemes, where we're going to have a bit of a fallow period at this point in time. The other part of this in relation to new build is, do we still believe that new build should have the premium that it's got going forwards in a world where we might see more property price volatility, and therefore there has to be realistic discussions as well with consumers around all of that. So new build is not going to be a simple marketplace going forward into 2021, but still, of course, a great option for many consumers as they want to get on the housing ladder or progress up the housing ladder. In closing, I'd like to talk to you a little bit about what I see as the final issues for 2020 and into 2021. I think government intervention has been unparalleled in terms of their ability to throw money into the market, and I think it will remain unprecedented, where I see, having invested as much as they have in maintaining the UK economy, whilst we will see individuals becoming unemployed and that having an impact on affordability, both in terms of the residential market but also the rental market, I do think that the government will continue to intervene and throw money at specific sectors and specific individuals in order to try to protect the economy as much as possible. One of the biggest challenges, of course, we are going to have as intermediaries is knowing your lender and who really wants to or can lend. And because of the problems we've had, and I do believe it's not about capital or capacity or even fear about loan to values, in that I do really see that we're going to have house prices up between 5 and 8% between March 2020 and March 2021. And I don't expect property prices to fall in the second half of 2021 by as much as that. So I think from March 20 to March 2022, prices are going to be broadly level, and therefore the concern is not there amongst lenders with regard to house prices in the same way, but is about their capacity to process as much as it is about capital or liquidity or risk at this point in the cycle. So knowing your lender, knowing who really wants or can lend at the LTVs, and knowing what they're looking for by way of evidence of income and properly packaging any case is critical in order to meet the timelines that customers will demand of us. Talk to you very briefly about where we are in the mortgage prisoner journey, which is that third-party administrators are now due to write to all of the prisoners that they identify during October and November. Lenders are meant to be coming to market with product or process changes in order to meet that liability during the second half of September. And the brokers who've applied to be on the Money Advice Service listing will get confirmation of everything on that in the next week or so that we're all ready to go with the project, which I think will run through the rest of this year and into next year in order to deal with as many of these people as we can. I'm also aware that there are issues in the professional indemnity insurance market for many firms, and we are commencing discussions with the insurance firms and the FCA in order to see what we can do in order to minimise some of the issues that I know firms are having with increases in premiums, increases in excess, and also exclusions from certain parts of business lines. And therefore, Amy is very aware of the issues in that marketplace and are doing our best to try to desensitise some of the issues that are there around that. But I would say to you, as we come out into the latter part of 2020 and into 2021, that consumers really need you, because advice is the key in what is going to be a complex and volatile marketplace. You need to keep talking to customers on a regular basis and stay front of mind as being the only place that they should go and talk to get advice. So finally, thank you very much for listening to me. I hope you enjoy the rest of your day. I know that Kensington always put together a very interesting lineup and it's very provocative. So thank you very much, and I hope to see you all again soon.